Hello guys, and welcome back to a new video. Today I wanted to address a common problem, a very common problem among traders, which is overcomplicating technical analysis or having an analysis paralysis. So basically, you try to implement every single thing you learned about trading into a trade idea. From the higher time frame to the lower time frame, you try to align every single time frame. You try to come out with that perfect combination of confluences to predict the next direction. All right, and that leads you to either two outcomes. All right, and none of those outcomes are good for you. So the first outcome is you win. Okay, if you win, it is very hard to replicate that result or that same process that you did in the next trade, in the next 10 trades. It is too complicated to replicate it. All right, so you will not have consistency in your style of trading. That's the first outcome, which is a winner. The second outcome is you lose, and when you lose, you will be so frustrated because in your mind you did every single thing possible. You put in a lot of work on those technical analysis and you think like everything is perfect, and yet it failed, and now you're questioning trading, you're questioning technical analysis. You think that the market is 100% random and you can't like extract patterns that you can capitalize on in the future. So overcomplication or using a lot of technical analysis concepts into a trade idea, whether it's the outcome is a winner or a loser, it is bad for you. And if you go to analyze charts of legitimate traders, you will notice that they have a common theme, which is their charts are very clean charts. They don't have tons of indicators, tons of lines, trend lines, I don't know. Their chart is clean. All right, and in this video I'm going to give you my framework of analyzing the chart, my simple framework going from higher time frame to lower time frame. I'm not giving you my strategy. Yes, it is my strategy, but this is something like a template that you can replicate easily, so you can modify on it, you can adapt it to your own strategy, your own style of trading, whatever it is. All right, you can use it exactly as it is. It doesn't matter. This like here is a universal framework, right? And you can modify it as you want. So the framework goes like this, very easy. The first thing is I need a direction on the higher time frame. That's it. When I log in to the chart, I need to see a direction, whether price wants to go lower or higher, right? We all do that. I mean, that's the whole purpose of trading, whether we want to go up or down. That's the whole purpose of technical analysis, but this is a lot different, and I'm going to show you how when we go into the framework. So choose a direction on the higher time frame. Do we want to go up or down? If I'm not sure about that, I close the chart or I wait for a few more candles. The next thing is, and again, I'm not gonna over analyze that on the higher time frame. I only want an initial idea, right? The second is I want a confirmation on the lower time frame of that idea. I want to see price meet my expectation. All right, and that's it. And I take the trade. That's the whole framework. But you need to follow with me till the end of this video so you know exactly how it works. And we're gonna go to the lab right now and show you exactly how you can apply that, right? So basically two steps framework. Direction on the higher time frame, confirmations on the lower time frame. Easy, right? But not a lot of traders use it the right way. And let me, for example, here we're gonna do like a hindsight example, and then we're gonna go to FX replay, right? And we're gonna do some just a quick backtesting session, not a backtesting session, but some examples. All right, so from here, this is the 1 hour, okay, and we're gonna take the 1 hour as my higher time frame. So from here, I'm not looking for something like this. Is price wants to continue here or it won't go to here? No, this is not the idea. I want to see or look for the low hanging fruit. Is price likely to trade to this low, right? Or it might go to this high, right? So this high or this low. Let's say, for example, I put an initial idea that the price is likely to continue to here, right? So based on what I made this little prediction right here, we can take maybe the whole trend, right? So the current trend is going lower, so, and this is like a pullback into here, rejected from this, and then we are trading to the downside. So from this simple analysis, I'm putting an initial idea in my mind that we might travel to the downside. All right, so that's the first step of the framework. Now moving on to the second step, which is confirming that idea on the lower time frame. Now, how do we confirm that idea on the lower time frame? Simple. I have a simple steps to follow, 3 or 4 steps, and that's it. So let's say, for example, the lower time frame is going to be maybe the 3-minute, and here you can play around with the time frames. So don't be like mechanical regarding the time frames. You can use the 1, 2, 3, 4 till 5 and look for those confirmations, because it's going to be different every single time. Not different, but not identical. For example, if you found your confirmation on the 1 minute in a particular trade, the next trade, the confirmation can be found on the 3 minute, on the 2, on the 5. All right, so be resilient with this. So here what I want to see is simple. How do I confirm that? How do I confirm that we're going here and not to this or this high? Simple. For me, I want to see 3 things. I want to see price sweep something opposing high. So here in this example, I want to go lower. So I want to see price sweep something to the left, like a high, all right? Not like a high, but a high, all right? So I want to see something get swept. That's the first thing. That's the first step, or the first condition in the confirmation step on the framework. After that, I want to see bullish line of defenses gets broken. So when price is trading to the upside and it swept that high, right, we are currently at a small uptrend. For example, here, that small uptrend is going to have line of defenses inside, right? For example, it can be an imbalance here that price, it can push price to the upside, or it can use it to push to the upside. It can be this zone right here, it can be this block or a down candle. It can use it to push higher, right? So these are line of defenses price used to push higher. So when those lines of defenses starts getting broken, right, and I see also the sweep here, so the sweep means that I'm not gonna get into a manipulation. I already let the manipulation pass, and then I go to or right with the price. Okay, so that's a very important concept, and we see it all the time. For example, here, right, a sweep, manipulation, and then going lower. So that sweep and those line of defenses are getting broken. So for me, that is a confirmation that we are going lower. Okay, we are in fact going lower, and to take this low right here. All right, I like to add something else, something extra that it will definitely increase your win rate. I like to add an SMT. All right, that's my personal choice based on the data that I have, and you don't have to add it. So this is just, like I said, something that I found out that it will enhance my win rate. So these 3 for me are more than enough to take a price lower. And then my TP needs to be respected. Okay, it needs to respect the next low, So no, I'm not gonna do all of this, right? And then I'm gonna enter something like this. Enter maybe a trade from here. I don't know. It can be here after those confirmations were met, and I put my stop loss maybe here, maybe here. It doesn't matter based on the price action. And I do something like this. Okay? No, you target this. You maybe target a bit lower, but so you're not targeting, I don't know, something here maybe. So maybe you can after price hits this, put break even and then continue lower. That's your choice. But the TP, or you might modify your order by break even, reduce the stop loss, take something like a partial from here. It needs to happen on this level right here, because your whole analysis is based on price taking this low. So you need to do something here, okay? Not taking price lower. These are all confirmations that price wants to go here. It's not confirmations for price to go here. All right, so that's the whole framework. Easy. You go to the higher time frame, and you might ask how you do that on the higher time frame. Again, use very simple tools, use very simple concepts. You're not trying to predict this. It's easy to predict the low or the high. It's not that complicated. It's easy, and if you practice on it, it's going to be way easier for you, right? Instead of wondering if price is going to take this low, for example, or this high, right? And try to take a tight stop loss and target this. No, you're just targeting the low-hanging fruit. I'm going to show you how I do that on the FX replay, right? Now, what if we didn't see these expectations here and price did continue lower? We don't take the trade, okay? These are your plan right here. These are the conditions that tells you that if this happens, you take the trade. This is the plan. Otherwise, you are just trading and relying on your mental state on that particular day, right? What if price didn't trade to here, it traded to here? Okay, so that idea of ours in the higher time frame was wrong, and that's normal. Okay, you don't need to have 100% prediction rate on the higher time frame, right? You only need an initial idea and confirm that with here. What if all of these happened, right, and you took a loss? You managed the risk, right? That's it. Now let's go to FX replay and show you a couple of examples. All right, so let's create a random session from here, and we can use let's use Euro USD. I don't trade it anymore, but let's use Euro USD, and we can use DXY for that second condition or third condition, which is DSMT. All right, those conditions to confirm that idea from the higher time frame, right? And let's see. Let's use maybe this one, right? This year, and let's do 1 week. So all right, so suppose we are here, New York session, and let's take the 15-minute as the higher time frame. We're gonna go to the 15-minute and we're gonna try to figure out whether price wants to go to the previous low or the previous high. Which one is more likely? All right, we want to take the low hanging fruit, make a prediction based on that, the low hanging fruit, the nearest low or the nearest high. We don't want to target this or maybe this. No, just the low hanging fruit. Next thing, again, go to the lower time frame. The lower time frame here can be the 1, the 15, the 5, the 2 minute, the 3 minute, not the 5 second, but it can be the 15 second, the 1, the 2, the 3, the 5 minute. Okay, But the idea is you need to be resilient with the time frames, because you can't be mechanical about this. For example, if this trade you found a nice combination of a 15-minute low-hanging fruit, which is maybe the high, and then you went to the lower time frames, and on the 1 minute you found a really nice setup there, you found those confirmations of going to there. For example, me, I found that sweep, I found that SMT, and that violation of those bearish line of defenses. The next trade I might use that combination or that confirmation on the 2 or the 3 minute time frame. Okay, so that I don't force myself to use only one time frame on the confirmation phase, right? And you will see how that looks like. So let's say, for example, here, let's see here, I don't know if price is gonna go to here. This is like the nearest low. It might be also this one, so we might continue to here and take it, and it might be the case, although we don't have enough pips to capitalize on that, right? So this is like what, 3 pips, so now we can't take it. And this is just like a random combination of time frames. You can use this as a daily, and this is the previous day low, and you want to target that, so you can. All right, so let's put this as for the sake of experiment, right? This, I might target this low. In my mind, there is a chance of going to here. Why? We are still pulling back. Yes, this is an uptrend. Yes, this is an expansion, but we might continue the pullback, right? I don't know, but let's say this might be the next low. So what I want to do is I go to the 1, right? I go maybe to the 15-second, and I want to look for those confirmations of mine to happen. So I want to see a sweep now, right? Let's see if we have a sweep. That's the first trigger in order for me to go and look for the second and the third, right? So I don't know what's wrong with DXY here, but let's continue. And remember that this right here is the low. So the sweep might happen here. It can also happen here, we don't know that. Okay, so we have the sweep, and now we have line of defenses. This, it can be this, that can push price at the upside. I want to see these gets broken, right? Let's go to the 1 minute. Okay, so now this right here is a good trade for me. We have those lines of defenses, and we are breaking every single one of them, right? For the sweep, you can see that price manipulated here, right? Took all of these, and then we traded to the downside. I don't know what happened to the XY, but it looks like we can't rely on it right now. But we are now violating every single line of defense on its way. So what I can do is I can take my entry from here, maybe from this fair value gap, I don't know, this imbalance, maybe from this imbalance, I don't know, right? Something like this. Put my stop loss here, and I target this. So let's see. And you can see my target has been hit. This is just a simple example, right? But you can see that on the higher time frame, this is what I used. The low hanging fruit, the recent high or the recent low. I don't need to target this, right? I don't need to target this. I need to target only the easiest recent target or recent high or low. That's it. And I work my way out to the lower time frames, and I look for something to confirm that. In this case, my 3-step process. I see sweep, right? I see those line of defenses that might push price to the upside gets violated, and then I take the trade. And I get my TPs here. Look what happened after, right? Look what happened after. What if I took the trade from here? I don't know. And I want to target this. You will easily get stopped out, right? Because your whole analysis was based on this target. So you don't do all this analysis based on this target, and then you're gonna do 3R or 4R and you go to the left and you try to convince yourself that the price might come back to this imbalance, to take this low, to take the previous day low. I don't care. You did your analysis based on that. This is where you take your TP. This is where you put break even. This is where you take something out of the table. All right. So now what if another situation? What if price did this? What if price took this and then came back to the entry? You don't enter. Simply don't enter. This whole idea has been violated. All right. You entered because you want to target this. It has been hit. Even if there is the perfect setup right here, the perfect combination of confluences here, you don't take the trade. This whole analysis was based on this. Now this doesn't exist anymore, so you don't take the trade. Even if it worked later on, you don't take the trade. You don't take the next trade where this happened. Okay, this is not sustainable, and our mind tends to forget all the losses, all the mini losses based on this thinking or this idea, and then we remember that one win that we missed because of this, that one win where the target was hit, price came back to our entry, and then it traded to the downside heavily. We remember that win, and we forgot all of those losses that happened because of this. All right. So what you can do now is you're gonna go to your lab and you practice on that. You practice on these low-hanging fruits. If you don't know where price might go next, you stop, you wait until something stands out. All right. When you have an initial idea, an initial target, you go to the lower time frames and you look for patterns there. Your patterns, whatever you're using, okay, you look for them there. So I hope you liked this video. It was a very important subject that few people talk about it in this space, right? They all advertise shiny indicators, shiny concepts, shiny 5-6 hour trades, flexing their money. All right. They don't get even from trading, but few people talk about a logical framework, a simplistic framework to approach charts. So again, I hope you like this video. If you have any questions, DM me in my Twitter account or leave a comment down below and I will answer you as soon as I can. Now, happy trading and good luck.